It's Friday, May 19th, 2023. This is Mike Wade, your host for today. And joining me is my brother from another mother, my trade mother, Roy. Rob, how's it going, bud?
Good, Mike. How are you? Long time no see.
I know, man. We spent a lot of time in Australia, New Zealand together, all over the States, showing people how to make this trading a reality for themselves. So, man, it's good to be back with you, man.
Yeah, same here. It's interesting, isn't it? We traveled the world together educating people, and now we're doing it through the magic of the internet. It's unbelievable.
Rob, you probably remember I used to have hair. I don't have.
Well, I like the fact that everybody has made the comments of you look like Chuck Norris with the hat, so now I get to wear the hat all the time, so I don't have to show that mine's falling out too. So
yeah, you actually look a lot like Chuck Norris, man.
That's what people say, so I go with it. I take it as a compliment, so I'm happy to hear that. But it comes up a lot.
I'd say a younger Chuck Norris.
I appreciate that.
Well, dude, it's really great to be with you again, man. We've had a lot of great times together, and I'm looking forward to hosting the show with you today. So everybody, welcome to the HUBB U.S. Market Update. My name is Mike Wade. As you know, Rob and I have a long history together as traders. And we're very, very excited to be here. In just a few minutes, Rob's going to take us through some stocks of interest, or give us an update first. But before we do that, remember that if you want to see the cool software Rob is using, or even have it in your own hands, check out HUBB.com down below there. You can click that link, go to the website, and see the very same charts that Rob is using. So that's one thing I want to say before we start, Rob. And the second is, as you go through this live feed, if you like what you see, please hit the like button on right below here, right below my face. Hit that, and maybe even subscribe to this channel. We'd love to have you part of our community. So, Rob, let me pass it over to you. What is happening? I heard something about a debt ceiling. Is there something going on?
Well, it's funny. I mean, there's some rumor about that, right? There's been some slight chatter about that. Yeah. Interesting comment as you talked about the software. I actually had somebody that wrote in and said, how do I make my charts look exactly like yours? And I said, well, do you have the HUBB software? And they're like, no. And it's like, it's gonna be a little challenging then. That's how you make it look like this. And I do believe it's a clean looking chart. Plus it's the best Deli Wave software that exists on the market. In my opinion, I've tried all the ones that I know to exist. I don't ever like to say that I've tried them all because I don't know that. But anyway, you ask about the markets, and yeah, let's talk about that. You can see the market went nowhere for 2 months. In fact, on Tuesday night, we were talking in TradeFinder, and we do TradeFinder live every Tuesday night, 9 p.m. Eastern time. It's a great time. It's free. Invite you to sign up. Hopefully you're seeing you see the link on the screen there, or you can go to ewotrader.com and sign up there as well. We talk the markets, we look for trade ideas, and we have a Q&A at the end. It's a great community, a lot of great questions that come up, a lot of stock symbols that people like to look at. So Tuesday night, we're talking about how the market seemed to be on pause, waiting on some news from Washington on the debt ceiling. And I was like, do we really think they're not going to eventually raise the debt ceiling? We know they're going to. They all take their 5 minutes of fame, and they'll wait till the 11th hour as always. And then just like right on cue, late Tuesday night, early Wednesday morning, then we get the news from both President Biden and House Majority Leader McCarthy. I actually think we have a headline of that that said that, hey, we are not going to let the U.S. Default on their debt. And so with that, the market rallies. So we get this big rally, and then after the big rally comes today. So here's the two moves today. Now, what is different than what we talked about last week is when we take a look at this chart, and I turn the Ellie wave pattern on because everybody knows for quite a while now there's been no qualified 5-wave Ellie wave pattern. There is now, but look how small it is. We only had a 38.2% correction on the wave 4, and then we move up to the wave 5 target, and it's not that far away. We have some resistance at 420. 410 was a very important level, and then we didn't break that yet. But today was pretty interesting because we followed through with that move up to 420. Looked like we were going to have another decent day today. And we have this Q&A. It was an interview with Bernanke was there with Chairman Powell. So that was pretty wild, having Chairman Powell and Bernanke sitting there, and it was a love fest between the two, going back and forth. And then I thought it was interesting when Bernanke, because I used to tease Bernanke when we were traveling doing our live seminars, is the fact that he's the one that really took this easy monetary policy and threw fire on it and made it massively injection of liquidity. And Bernanke said Greenspan started it. And I thought, you got to be kidding me. Greenspan was like 3%. So there was this gradual growth. They used to show the chart of the money supply, this gradual growth in money supply. But Bernanke's the one that turned it vertical, but he kind of tried to turn the blame over back to Greenspan. I thought that was hilarious. So they're talking. The market looks like, hey, you can see where the open is. Perhaps we're going to break above 420, maybe go up and see if we can hit that wave 5 tap box, which is the time and price projection. So based on this small correction in the wave 4, a little bit of a move to the wave 5. And as they're talking, all of a sudden the market reverses. And I think there was probably a tiny moment where people are wondering, is this in reaction to Powell and Bernanke talking? But then we get the news, the breaking news headline that the Republicans have walked out of the debt ceiling talks because they said the Democrats are being unreasonable. Now, I want to be very clear. We don't get political here. That's not what we're about. Everybody has their own political beliefs and political affiliations. We don't talk politics. What we do talk is how whatever the current policies are affect the markets. Our job here is to analyze the markets, not politics. But that's what happened. And as soon as that happened, it kind of squelched the rally. We didn't have a big down day today. We just finished, as you can see, a little bit off the highs, but it did kind of turn things back. And it happened to coincide with the fact that we are a little bit above the 10-day moving average. And I talked to our subscribers last night at our insiders meeting, which we do every Thursday night for our alert subscribers only, that we are a little bit above the 10-day moving average. And if we tried to break 420 today, being already a little bit overbought, it might not hold. Well, now we don't have to worry about that because the Republicans, with that news walking out, turned things down. So I think the fact that we didn't have a bigger move to the downside on that news means that everybody is kind of along the lines of, we see what you're doing. We know you're going to raise the debt ceiling. We are going to get this done at the 11th hour. My concern is at what point in time, and it may be in our lifetime, Mike, maybe, or it might be in our next generation's lifetime, but who's going to pay the price as we continue to go further and further and further in debt? So who knows? That's a discussion for another day, obviously. So that's it with the S&P breaking, trying to break above 420, got turned back with that news, which was really interesting and timely, in just a conversation that I had to laugh at the TV between Bernanke and Powell. Powell's basically saying, or what he said in there was, the Fed, and this was kind of where things were a little positive before the news of the Republicans walking out of the debt ceiling talks. He was saying that maybe the Fed doesn't have to raise rates anymore, because if there are credit tightening conditions in the banking sector, which we all know what's been going on there, we've highlighted that in the past, that bank restriction on credit could help the Fed do their job, and maybe they won't raise rates again. The Fed Fund Futures says they're going to cut in September. Whether or not that happens or not, I don't know. I think we're going to have some awfully ugly news between now and then if that's going to occur. But the whole thing was really kind of interesting today. So I guess we can sum up the entire week with all that news that came out today. But we bounced from 410. Now we're at 420. And, I think the thing is here that if we can break 420 meaningfully, perhaps we're off to another leg to the upside. But if we come back down and we were to somehow break below 410, then I think you have to be very cautious again. So let's just look at some of the other markets real quick. I kind of talked a bit on the S&P and everything else, so you're not going to see much difference in the other markets. There is no 5-wave qualified pattern on the DIA, and we're still looking at this range here between 340 and 330. So there's support there at 330. There's resistance at 340 until the DIA breaks between one of the, look at the 10, 30, and 50-day moving averages. If you're new, welcome to watching us. But the 10-day moving average is that lime green line. The 30 is the fuchsia, and the 50-day moving average is the royal blue line. All of them at the exact same spot, right dead between support and resistance here on the diamond. So I think if you're a Dow trader, you wait, be cautious. Well, let's see which way we go from here. Well, here's the market that's been fun, Mike, is the Qs. And we have this big run to the upside here on the Qs. And what's interesting, I'm going to show the S&P or the small caps, the IWM here in a second, and then we'll talk about why this has been interesting as far as what rates have been doing. And we are overbought on the Qs. We had a big sprint to the upside as the market rallied from 410 on the SPY. Once again, overbought. So this little tick down, not a big deal today. But we are at 100% extension now on the wave 5. So we had a 50% wave 4 correction. That means 100% extension on the wave 5. That, I think, is more concerning than this little tick to the downside today. We have to look to see, are we going to get some sort of a extended wave 5? I like to look at the DMI to see, and the DMI is pretty constructive. That's the way you want the DMI to look. So it's saying, yeah, there is some strength to this breakout move. Perhaps we could go higher. I think the Qs are going to be where you want to be as the rate cuts begin. So let's look at the IWM and then we'll look at the rates. So here's the IWM and this tight range we've been talking about. Even with everything that's been going on the last few days, we haven't been able to break above 180. So 170 to 190 was the range. Now it's much tighter, as we've been talking about the last few weeks. We weren't able to get above 180, and so we're right smack in that range. So still the same. Led Zeppelin song remains the same there on IWM. So looking at the 10-year, here's what's been wild here to me is the fact that rates jumped to the upside. You would think that would have been a negative for the Qs, for the tech stocks. They usually like lower rates, but we moved to the upside. You can see that we had that really nice doji today. Note that the LA wave pattern has changed, and that's by design with LA wave, because we had this pattern. We were wondering if we were going to go up and test that 4. We did. So then we looked for a relabeling, and we're in a wave 5 to the downside. Now, to me, the fact that we're about to raise the debt ceiling, the fact that the Fed is likely going to cut rates will be the next move. Argue whenever that's going to be, this year, next year, September, whatever. Why are rates going to the upside? To me, that means money's coming out of the bond market and has been moving into the equities market, because you would suspect that rates would be creeping down, not to the upside. So I think that's what's going on there. This doji is super interesting to me. So we'll see what happens with rates next week. Does money come into the bond market now because rates ticked up a little bit? You know, a lot of money moved into money market accounts as rates were higher because they were getting more money than they were in the banks, which we know added to all the stuff with the regional banks, et cetera. And then the dollar is the one that's really has me flabbergasted, is this move to the upside here. We talked last week about, or 2 weeks ago, about how Jeffrey Gundlach had said he thought the dollar's going lower. He saw no way the dollar was going to the upside, but he's a bond guy, not a currency guy. And I'm sure he's a bit shocked with this move, as am I. Raising the debt ceiling, how's that a positive for the dollar? So I don't really get why the dollar's bouncing to the upside. I think there could be something we need to be careful of. Maybe there's something nefarious going on behind the scenes that we're not aware of. Maybe we are going to have a little worse than expected recessionary data come in over this next quarter, or maybe other countries are concerned about what's going on in their own worlds. I saw a note that China is being really, really hard on the countries that they lended money to. They're giving them no quarter, if you will. They want their payments back, and a lot of countries can't pay it. So maybe there's some money hiding internationally in the dollar, but that one's blowing me away. And that's, of course, been negative for the metals. And then last but not least, as we're talking about the markets, we'll talk about the VIX. And we've noted before that we broke this support area at 18. That's where we had been for a while. You can call the line 18, 19, wherever you want in there. We broke below it, and we've just been churning here below it. We do have a very basic qualified 5-wave pattern, but as I've noted in the past, Elliott himself didn't like a corrective move unless it got to 38.2. He said, hey, 23.6 is a fib level, so the software and his algorithm labels it, but he would always say in his notes, and I've read more than just what he, his own notes, not just the algorithmic stuff, to watch for a 38.2% correction. So in his mind, if he were still here, I think he would say this is more of a continued impulse of the wave 3 to the downside, then that's really a legit correction. So that would lead you to believe that perhaps at some point we'll get a little bit more of a bounce out of the VIX, but for now it hasn't done it. And as long as it stays below 18, you got to respect that as resistance until we break above it. So I say that's constructive from a volatility standpoint until we break back above 18. So that's it. Sorry I spent so much time on the SPY, but I felt like all the commentary was necessary.
Rob, that was awesome, man. It's good to be with you. I haven't heard you do that in a long time, and man, really, really great stuff. So what would you say? That I would say, based on what I'm seeing here, is that it looks like the markets are toppy. They may drop unless they don't. Am I correct?
Yeah, I think that covers both sides, right? Sometimes I get criticism because people say, everybody wants to know, where are things going? Nobody knows.
Who knows?
So I read the charts as best as I see them, understanding nothing's 100%. Even Elliott Wave is not 100%. I think Elliott Wave and the confirming indicators that I look at has a pretty high percentage of accuracy, but it's wrong at times as well. So what I try to do is ask people, are you prepared if it goes the other way? Here's where I think things are going to go, but you should always be prepared if things go the opposite way. So it's not like I'm playing both sides, like some, the haters, they always want to say stuff like that. I'm just trying to help people be prepared for a movement on their direction. So yeah, I agree with what you said.
Yeah, man. Yeah, remember that guy we used to work with in that other company, George Fontenel's?
Yeah.
He always say, before he placed a trade, he'd always say to himself, the first question I ask myself and answer before I place a trade is, what if I'm wrong? And, that's a big part of our game, Rob. We're always focused on risk management.
Absolutely. And if you're not doing that, you're making a mistake because, again, nothing's 100%. And you need to know what you're going to do rather than react from a panic or a stress area. Have your plan already ahead. Okay, here's what, my trade is, but if I'm wrong, what am I going to do? And don't wait till you're in panic mode, because we don't think as well when that happens, when things are going wrong.
Now, do you take care of that kind of stuff for traders in your TradeFinder? You do that kind of stuff, right? You teach people how to manage risk and things of that nature?
We absolutely talk about that a lot. We talk about it in TradeFinder. We actually had a very long discussion about psychology last night in the insiders meeting as well. So yeah, it's a big part. It's very important. And, Elliott Wave is pretty much based on the psychology of the masses of traders. So if you're missing that boat, then I think you're making a mistake.
Amen, brother. Yeah. Well, I say it this way. If I take care of my risk, my winners will take care of themselves, especially with systems like this and these charting packages that you have, Elliott Wave. Again, if you want to get access to this kind of software, you can go to HUBB.com and check it out. But Rob, really good stuff. I'm also very excited about the US dollar getting stronger because, I live in Costa Rica now. I told you that, right?
You did. Yeah. And what a beautiful place too.
Yeah. You coming to visit?
I am. Yeah, you told me you have a golf course nearby. So yeah, you'll get a knock on the door. No doubt about that.
And then bring your surfboard. We'll learn how to surf.
Oh gosh, that's been a long time. That could be an ugly experience, but it'd be fun, I'm sure.
Yeah, we'll do it when you come down. All right, we've got lots of people filling the chat boxes, the questions. If you have any stocks you want us to look at, please go ahead and post them in the chat box. There's so many now. We may not get to all of them, but we're going to give it a shot. So Rob, I think it's now time for us to take a look at stocks of interest.
All right. Well, when we take a look at stocks of interest, and there was a chart that you actually sent in, I know you're a big person that likes to watch dividends, etc. And there's some stocks that are on there. If we have that chart, perhaps we can put that up, guys, so people can see. And right at the top of the list, there we go. There's one that we cannot do one of these webinars without. Mike, everybody talks about NVIDIA. Everybody loves NVIDIA. We had this trading range here. You can talk about the dividend aspect, because I'm not sure everybody is aware that they actually had a dividend. Whatever comments you want to make there. So we tested this 280 level. We broke out of the trading range. We came back. We tested it. We're rallying up. We do have an earnings report on the horizon. As I mentioned in the past, NVIDIA has a high multiple. It's price for protection or perfection. That's a bit of a Freudian slip there, right? Price for protection. I think you ought to be protecting yourself if you've been long here with this vertical move. But it's price for perfection on the earnings report, and that's going to be really interesting.
Yeah, Rob, as a trader, I'm always looking for an edge. You're using charting packages, Elliott Wave, to get an edge. Another edge that we can go after is this thing called a dividend. And a dividend is nothing more than a company paying you to own their stock, sharing their profits. And what's one of the really cool dividend behaviors is when a company continues to increase their dividends year over year. Those stocks do really well. They even do well in a high inflationary environment. And so what I have here is a list of stocks that all have, over the last 4 years, increased their dividend. There's one exception on the top of the list. And all of these stocks yesterday hit an annual high. So if you think about that, big dividend growth, driving a stock higher, the stock is actually reaching an annual high. And when I first started trading, Rob, I don't know about you, but I was very reluctant to buy stocks that were reaching highs, but they're reaching highs for a reason. And dividends is part of it. You can see it in a chart. And if you look at this list of stocks, all of which are ranked by dividend growth as well as stock price movement, NVIDIA is on the top, even though over the last 4 years, there's only been one dividend increase, but the stock's rising nonetheless. All the other ones, for the most part, have increasing dividends and hitting an annual high. So you see the tech stocks, NVIDIA, Apple, Microsoft, those are the stocks we often talk about. Everybody talks about, you guys talk about here. I'm now here. We talk about now, but others came on the list that I hadn't seen, Rob, like Lilly and Lam Research. I think we should look at those charts. I was surprised when I saw those stocks on the list.
I was too, and I thought that was a really cool chart that you shared. And you actually, so that's one of the great things about we've known each other for a long time. We've traveled around, and when traders get together, especially traders that have been around a long time, I think we learn things from each other. And I was one of those guys that even though it has a dividend, if the stock is moving way to the upside like this, even though they're increasing their dividend, it would be one that I'd shy away from. But look what I would have missed on a stock like Lilly. And yeah, we talk about the NVIDIAs, the Microsofts, and those tech stocks all the time. But this is Eli Lilly. Look at that move. And if you haven't been participating in that, you've missed out. I'm one of those that has missed out of that. So that was really impressive for me to see that. It's in a just look at this wave 3, Mike. There's been really no correction in that move. Really impressive looking chart. So I think the message here is for, even the media is guilty of saying the whole market's been moving on 5 stocks. That's not exactly true. Everybody wants to talk about those 5 stocks, but I think that's a pretty darn good chart too. So there's other places to find movements to the upside other than the big 5 tech stocks.
Yeah, Rob.
Lam Research, yeah, and look at this breakout. This is near and dear to my heart. I'm sure you remember how much I like triangle breakouts, and so here's that nice little ascending triangle, and that's what you expect to see happen out of a triangle. We actually have one of our portfolios at ewotrader.com is based purely on triangle pattern breakouts, and that's a great one. So Lam Research is one I hadn't looked at in a while, and then that chart you showed there, I thought that was really impressive as well. So something a little bit different for people to consider, that you don't have to just get focused on a few stocks. It's a big market out there.
Yeah, thousands and thousands of stocks to choose from.
Yeah, but you narrowed it down for, I mean, I just think that's a really important cog. You know, there's so many pieces, and that's why trading isn't easy. You know, there's a lot to learn, and you got to put your time in. And so looking at stocks that are at new highs and that are increasing their dividends clearly by the charts that we're looking at here is a place that people can focus some attention.
Yeah, no doubt, Rob, absolutely. So what other stocks of interest are we going to look at today, Rob? Bitcoin, maybe? Do we look at Bitcoin ever here? I think we do.
Yeah, because if we don't, everybody gets really mad. So yeah, Bitcoin is one that you know, we had this big move to the upside. I've talked about this a lot, so I'll go through it real briefly here. The key here that we've been talking about for the last 2 weeks, going all the way back here, basically to the middle of April, so a month, is how important 27,000 is. It needs to hold that. I don't like vertical moves. When things go vertically to the upside, oftentimes they come vertically back down. I was going to reference this chart on Lamb Research. You know, it's a little bit overbought right here, but that's a clean breakout. Perhaps it comes back down to test that 10-day moving average. But when you see something like that, it's going to go higher. It's just whether or not it goes sideways for a bit or backs off a little bit. But Bitcoin's a different story here because we have not retraced any of this vertical move that occurred from 27 up to 20, from 20,000 up to 27,000. We had this little triangle breakout here that broke out vertically, and what happened, it turned around and came right back down. So we're hanging on, look, barely, and I use the analogy fingernails hanging on a cliff, because if we can't hold 27,000 on Bitcoin, I think we're going to give back some of this vertical move that occurred from 20 to 27. So I know a lot of people are long Bitcoin, and I just think caution is the key here. Keep an eye on the 27,000 level. I would have a hard time adding to Bitcoin until we saw some sort of a significant bounce back above that level with some follow through. For now, I think there should be some nervousness of maybe a little bit of a give back here if we can't hold that 27,000. We hold it and bounce up, and whole different story.
Hey, Rob, I got a question on this chart.
Sure.
And correct me if I'm wrong, but do I see a head and shoulders pattern there?
You know, you look at this, and you know, left shoulder, it's not a bad one, is it? And
Yeah.
so there would be the head. And you know, people aren't going to want to hear this because we know what happens in a head and shoulders pattern. So you see that there, and here's the neckline clearly at 27,000. And for those that may not be familiar with it, what you do is you measure from the neckline to the top of the head. If that neckline gets broken, and it still has to get broken, again, nothing's 100%, but head and shoulders patterns work a lot. If that were to get broken, then the movement to the downside normally coincides with the distance from the neckline to the top of the head. So if we do break 27,000, that would at least give you a rough idea of where we're going. And I think somewhere in this consolidation area kind of works from that metric as well. So yeah, you just pissed off a whole bunch of people there, Mike. Way to go on your first one.
I'm a new guy. I'm new on the block. I didn't know. So Bitcoin is going to drop unless it rises, right? Okay.
Correct. That's where we are.
Yeah, it's all about rules, and you know, we're using technical analysis to try to predict the future. And you know, this does a good job here, but the future's never 100%. Right, Rob?
Correct. And I think, we're making light of it, but it really is true. If it bounces off 27,000 with follow through, then you're likely going to have an upside move. That's what it looks like. If it breaks 27,000, it's, you have a target of about where it's going based on this pattern. So, again, making sure that you're ready if you're wrong on a position on where we could go the opposite direction.
Yeah, no doubt. Rob, another stock of interest that we were talking about before we started today was Tesla. What do you say about Tesla today?
Yeah, that's another one that we can't leave out without upsetting people. And this is really important because what happened today. So we had this gap. I talked about before. So Ellie Wave has been so spot on Tesla for a while that anyone that likes Tesla, which everybody loves this stock, If you haven't been applying Elliott Wave, you've been really missing out, because it's just nailed. It's nailed Bitcoin too. So these last two, interestingly, have been Elliott Wave been just spot on. Even though we talk about nothing's 100%, it's been really good on these two. So we said that if it doesn't hold 180, we're probably coming to 160, and that's exactly where we went. You can go back and look at past recordings and see where we've talked about that. So we bounced back up and we filled this gap. So now is where the rubber meets the road. There's a couple of things here that are going against Tesla, and I know that's going to upset some people too. So I guess both of us are going to upset the mainstream here that loves Bitcoin and Tesla. But that gap has been filled now, and it isn't a qualified 5-wave to the downside pattern with a perfect 50% correction. So we just filled the gap and we corrected in this wave for exactly 50%. My point is, Tesla's going to have a tough go here. It's bumping its head against a pretty strong ceiling there at 180. Can it get back above it? You know, I actually watched an interview with Elon because he had lowered prices because Ford and GM had lowered prices on their EV vehicles. And then he turned around and raised them right back up. And that's what gave this last little spurt here to the upside. But if we can get above 180 here on Tesla, then perhaps we can disqualify this pattern and Tesla makes a nice run. But I think you got to be really cautious right here at 180 on Tesla. You know, there's a range here that we know between 180 and 160 now. So I think you kind of sit on your hands a little bit here. You can see we bounced between these levels back there. We did here, but a break above 180 with follow through, Tesla could be off and running, a break below 160, and we're likely looking at this wave 5 target down here in the 130 area, which again, I know the Tesla lovers don't want to hear, but that's a clean looking chart, filling the gap, hitting resistance, 50% wave 4. I would pay very close attention to what Elliott Wave is showing you on this chart and be really careful here.
I love this one, and right at resistance too. That's super mega strong 180 resistance level. So Rob, here's an idea. I'm going to buy some puts, and when it hits 142, I'm going to take the money and go buy a Tesla.
Oh, there you go. I think Elon would be even okay with that as well. He even talks about how his stock's overvalued, so I think he'd love that.
Yeah, he's an interesting guy. Love some Elon Musk. Hey, Rob, we got time for one more stock of interest. And then in a minute, everybody, we're going to go to Q&A. So if you have stocks you want us to look at, please type them in the QA box or even ask questions for that matter. But Rob, Foot Locker got taken behind the woodshed and beaten today. What happened?
It's so funny that you say that, because I used to say that, and I just Katie bar the door to the downside, and that's a Katie bar the door there. But people used to make fun of me for saying that expression too. You know, taken behind the woodshed. What does that mean? Well, if you're an old country person that's ever had a parent take you back there and give you a whooping, you know exactly what that means. And that's what happened to Foot Locker today. They missed earnings badly. They had negative guidance. Big move to the downside here. It happened to catch itself right around here. We do have an AI-based strategy at ewotrader.com that looks for this exact pattern, and then the AI takes over 300 data points and gives us a score on the likelihood of it staying in a range. And usually when you get one of these big drops, you kind of get a little bit of a sideways move. I would be shocked if this doesn't show up on our AI search on Monday. So watch TradeFinder on Tuesday night and see, because I'll update this. I think there's a high likelihood that shows up. We're looking for 20% moves or better to the downside, and you can see that was a 27% drop right at support. This looks like a pretty good setup for one of our AI-based trades. But yeah, everybody loves Foot Locker. They were on TV. They're talking about how the Jordan brand is still strong, and they were trying to make as light of it as they could. But that was an ugly earnings report with bad guidance. So yeah, rough day for Foot Locker. Yeah, good one to call up there, Mike.
Yeah, man. Thank you, buddy. Hey, so TradeFinder is when? Thursdays at 9 p.m.? Was that what it?
Tuesday at 9 p.m.
Tuesday, I'm coming. I want to come. I want to see that AI and what it'll tell us about this particular stock.
Right. Tuesday at 9 p.m. for TradeFinder. Interesting you said Thursday, so another Freudian slip, but Thursday night at 9 p.m. is when we do our insiders meeting, and that's for our alert subscribers only. So Tuesday night's open for everybody, free, open for everybody. So yeah, come join us Tuesday night during TradeFinder, and let's update this. It's great that we're talking about it now, and a good fodder for to have a reason if just having a free hour-long event with a great community is not enough. Let's look and see what happens with this stock. Perhaps we even can find a calendar spread or some sort of a trade idea for this one on Tuesday night.
That's awesome, brother. So you're doing this for free. That is spectacular. I'll be there. I'm looking forward to it. It's been a pleasure listening to you do your analysis. I haven't seen it done in a while, and man, you're a master, no doubt. So thank you for sharing that with me and as well as the rest of us. All right, Rob, you ready to look at some of our viewers' stocks?
Yeah, let's do it. Fire away.
Let's look at some of our Q&A. So Alpha Oscar would like us to talk about Occidental. What do we see there?
Yeah, energy has had a rough go, right? So it's been rough lately. And as most people probably know, this is one of Buffett's favorite stocks. Warren Buffett, he owns a big part of this company now. He's added to it a lot. The level here is key. Not the day you were looking for if you're long Oxy. So if you wanted to go to the upside, you wanted to see that break above 60 hold, because you can see again the support resistance there. Another one that's in a very well-formed, qualified wave 5 to the downside pattern. And if you're long, you don't want to see it anywhere near that 50 level, but that could happen. It broke below 60, and this looks like a test of resistance to me today, which was a failure. So it failed the test. I would be very concerned about this moving forward. And, we talked a couple weeks ago when the consumer confidence survey was released. One of the things that people had noted was that they are not going to travel this summer. It's a staycation summer because of inflation, because of the recessionary pressures tightening. Consumers are tightening their belts. So, not so good in the petroleum side if people aren't going to be traveling, right? If you're not going to be filling your gas tanks, it's tough to see how the stock could go higher. But your key here to wrap this up is 60. And then you see not too far away from that is the 50-day moving average. I would have a real hard time going long here unless we broke not just above 60, but above that 50-day moving average with some follow through. Then and only then do I think that you could have some upside here. And if consumers were being honest about staying home this summer, it's hard to imagine what's going to drive that higher right now. So yeah, I'd be a big concerned about Oxy right now. As you know, Warren protects everything that he does, but he also is in it for the long haul. And we're talking more like trading now. So I don't think a breakdown there would concern him. He'd probably buy some more.
You know what, Rob, I just got something from you, man. A staycation, people aren't going to be traveling as much over the holidays. You just give me an edge.
That's what they reported in the consumer. You got to look behind the scenes in these reports, and that's why we're here, is to share this stuff with people that don't have time in their ordinary lives to do things. So yeah. Awesome. Catalina's asking us about Adobe. She has a few more, but Adobe. Let's take a look at Adobe. Okay. We actually had a really good, and this is interesting that she's asking about this, because we had this as an alert in TradeFinder in the past, not an alert, but a stock to watch on TradeFinder in the past, because we do that during TradeFinders. We find stocks that people can follow along, and so we had this nice move here, and then it came down, so that was the end of that. But it has held support here at 340 and bounce back to the upside. Now this one is back above the 50-day moving average. It's slightly overbought from the 10-day moving average, but unlike the market in general today, a pretty good day for Adobe. But two things here that I'm looking at, Mike, is the fact that it's tiny bit overbought on today's move, and there's a ceiling there at 380. So I wouldn't be surprised if maybe, because look at how sideways it went back here in November and December. I wouldn't be surprised to see this one ping pong back and forth a bit between 340 and 380. So I'd have trouble going long unless it broke above 380, but some sort of a sideways trade, a butterfly. You talked about our old friend George Fontenelle as his favorite strategy, might make sense between 340 and 380 on Adobe. It looks like pretty good support and pretty good resistance there. So what normally happens when you have that scenario? Trading range. Trading range, exactly. If I was in Adobe, I would sell it at 380, Rob, if I was already in it. And a short-term trader, long-term traders, that's a different story. We're traders, so we kind of go fast pace. Totally with you. Yeah, you know what? I'm looking at this thing going, butterfly, calendar spread, broken wing butterfly. It's a beautiful chart. Yeah, it's perfect for those. Yeah, spot on.
Yeah, excellent, excellent. And then we have one last one from Vista Barbie, and I think DraftKings commonly comes up on the show. Vista Barbie would like us to give our opinion, your opinion on DraftKings.
Yeah, DraftKings.
It's DK.
DK. I always get the F before that one. I remember so many symbols, but this is one that I always my dyslexia, I guess, kicks in on this one. But you know, this has been a bit surprising to me, Mike, because this move we called because, you know, we felt like this quarter was going to be good, right? They're coming out of the Super Bowl, the #1 betting event. They're going into March Madness, which we know people bet on. So figured that that was going to be a good quarter, but it's had some follow through here in May, which that's been a little surprising to me. I thought perhaps we were out of gas here, and I thought that this big move here might have been a blow off top here, this gap to the upside, but it's come down and filled that and bounced back above it, and it's trading above the 10-day moving average. I'd be a little cautious of this doji looking bar here, so I'd be cautious moving forward, because I still feel like, you know, until football season comes around, what are the, you know, what's the major betting events? What's going to drive this stock higher? And so it could be maybe a quiet summer. Perhaps we, you know, go a bit sideways here on DraftKings. However, I've been wrong these past couple of days. So, you know, see what happens on Monday with this doji. If it can break above 25 here, then, you know, perhaps it's got another leg running. That would surprise me, but I've been surprised before, Mike, you know. So the markets, you trade what the markets are telling you, not what you think is going to happen. I learned that lesson we were talking about hard lessons earlier. That's one that I learned. You know, the more education I got, the more I learned, the more I thought I knew where the market was going to go. And the market is quickly to remind you who's boss. So a key tip: trade what the market's telling you, not what you think is going to happen. I don't care how smart you are.
Yeah, I'm with you, man. I'm with you. All right, everybody. We're running out of time, Rob. So I want to wrap this up and just remind everybody that if they want more of this, then they come to TradeFinder, free Tuesdays at 9 p.m. If I got the day right. Is that correct?
Absolutely. Yep.
All right, brother. Well, I tell you what, it's a pleasure to be here, Rob. I've really enjoyed this session with our first, hopefully, of many of these, and it's really good to be back in the fold with you, brother.
Yeah, same here. And it's awesome because we did a few different things, looked at a few different stocks, and yeah, this was really fun. Good sessions. Good to see you again, Mike. And I'm enjoying and worked with you today, and I look forward to the future.
And me as well. Thanks, everybody. Have an awesome weekend, and we will see you next week. Same bad time, same bad channel. Bye, everybody.
Have a great weekend, everybody.